What is up, guys? I'm back here again with another one. Today, I'll be discussing an important consideration for precision when it comes to finding zones for entries. Sit back, relax, and enjoy. Cool. So now, looking at volatility 10-1S right now on the daily time frame, I want you guys to see what's actually happening. What's actually happening right now is that it seems we have formed like a head and shoulder pattern. This would be your left shoulder, this would be your head, and this would be the right shoulder. And we are headed down. And where we are headed down to is probably likely to, let me just be neater, to what we can call a neckline over here. Whether we break the neckline or whatever doesn't really matter, but there is potential that will break to the downside. If not, then obviously what will happen is we just bounce. But that's not what matters. What matters right now is that seeing as we have come to the conclusion that we are sitting at a head and shoulder pattern right now, and we're expecting price to get somewhere around here, probably we can do something with regards to this downward momentum and actually find some sell movements on the lower time frames. Okay, so this is the daily time frame. I just wanted us to look at on the weekly time frame what's actually going on. No one can hate you for looking for sell positions in here, because on the weekly time frame, we're also in this huge selling order block, and this is when we have entered the selling order block. We've had a little congestion, and it seems like, yes, for sure, we are on our way down. And then if we're to look at the overall picture, one could actually want to say that we're in what we call a consolidative state. The reason why I would say that it's a consolidative state is that clearly we have a resistance over here, and then we have a support here. So, there's many instances, or should I say reasons, why you can look for a sell position without not feeling guilty about it. Okay, so now quickly back to this daily time frame momentum that one would want to take advantage of. Now, coming to the strategy that I really want to share with you guys tonight, I want to say to you, right, if you want to find a sell position, right, because we say, like I said, we're headed here. Obviously, we're going to scale down to the lower time frames, and essentially what we would want preferably is to nicely see lower highs and lower lows like that, right? And then we want to join this at a most recent high. But now what I also want you to do is to also look at the opposing force. Okay, I know it doesn't really sound, what I'm trying to say doesn't really make sense, but let me try to explain to the best of my ability. Okay, so this is the H4 time frame, right? And we're on our way down, and would really want to join this downward movement as we go down. But we all know if it was that easy, then all of us would be billionaires, right? The point I'm trying to make is that we're going to have to find a nice area where price can possibly retrace to, and then we can get a nice sell position as we trek to the downside. Okay, currently right now, the market, we can say, is currently overtaken by sellers. I mean, you can clearly see impulsive leg to a certain extent, correction, impulsive leg, correction, impulsive leg. If we can get a correction and then we head to the downside, that's exactly what we'd want. But now on the lower time frames like H1 M30, I want you guys to see that there's what we call an opposing force. If we are going to the downside like this, right, you need to also anticipate the fact that price will retrace, or should I say will reject from somewhere and move against that downtrend we're talking about. So this has actually happened on the past, but you just need to be really observant of that movement. Okay, so what do I mean? Clearly, when price was on its way to the downside from here, you can see that there was an opposing force somewhere around here as well. This is one example. You can see in the past we had a nice buying order block, and it resulted in that demand. So hence, we are on our way down right now from that daily selling order block, that weekly selling order block. But that does not mean that we'll easily just break this demand here. Hence, the market moved up. Do you understand? So if you're not careful, you're busy selling too low at a price that is too low like this, that movement takes you out, then price continues to the downside. So what do we do to deal with this? You need to monitor these areas where there's likely to be an opposing force. So here, there's a buying order block, and price came in there and it bought. Now, your best bet is obviously to want to look for a sell position, but you really need to weigh out your probabilities to say that, okay, if we are utilizing the demand in here, for sure, we can find some supply in here and continue. But a safe trader in this example would have at least wanted price maybe to tap into this supply. You understand what I mean? simply because of that demand from the past, one would actually assume that actually this is the safest bet. So this is the thing about trading, right? It gives us all these scenarios so that we can say to ourselves, where at least are we safe if we participate? So that's one opposing force example while we're on the H1. Even if we go down to the lower time frames, of course, it will be clearer. And then I can see one over here, right? You can clearly see there was demand in this zone in the past. What happened is actually we were going down like that, and then guess what? We pushed up like that, right? And for sure, on our way down, as we are coming down like this, the market is trekking to the downside using the daily momentum supply and all those things. But that doesn't mean we just break these areas easily, all right? So hence, we get into this area, okay? And that's why we have a push up like that. One who wants to be a safe trader would have wanted to come and wait to execute here, right? To say, okay, this demand in here is likely to get matched with the supply in here, and then we'll continue to the downside. I hope that makes sense. But that's not what happened. In fact, in this example, I'm sure if we go down to the M30 or M15, there's a selling order block there. You know, I want you guys to understand that, yes, there are random movements in the market, but then the market is for us to take advantage of. Us that are really observant and keep looking at these things and try to look at ways in which we can milk it, right? So this is what I urge you to say backtest, because without backtesting, you won't even get to know stuff like this. So now going back, you see, this is the H1, that demand we're talking about. We came in here and we sat and price went. And it went into somewhere around here. And I'm telling you that on the H1, it's not that visible what it went into. But if you go to the lower time frames, you're going to see, you see, it actually came into this M30 selling order block and we dropped. You understand? So what's happening, if we nicely zoom out, this was an upward movement, right? Now price is coming to retrace that upward movement, but not as easy as you would want it to be. While price is moving down like that, it's going to match some areas of demand from the past, right? That is going to force it to go up, right? So you just need to be careful not to be trapped. And then you wait at also an area of nice supply that you can take advantage of, and then you do that. In fact, in terms of risk to reward for you, it's going to be better for you. And I know some people want to trade against the trend. Trading against the trend would mean maybe you want to buy these. For sure, do what you do if you know when to get out. I mean, I even scalp this sometimes, you know, but you must know that the original movement is actually to the downside, as we have seen on the daily time frame and the weekly time frame. So your best bet is exactly that. You want to go with the higher time frame momentum if you want to maintain ease, right? And maintain a higher probability of profits. Okay, so now currently, what can we say about the market structure that we have right now? We're definitely on our way to the downside. I want to go back to the H1. Now I want to look at areas whereby we might find problems, and clearly you can see over here, right? Remember, we are on our way down. If we go back to the daily time frame, what have we said? We said that this is a head and shoulder pattern, right? And we are expecting for price to come to the neck. It's just speculation, right? Left shoulder, head, right shoulder. Our speculation says that we're set to come here. But on our way there, there's opposing forces that we need to simply cater for if we're going to handle this thing in a precise way, in a precise manner. So now with that being said, we go back to the lower time frames, and on the H1, I can clearly see an area where there was a lot of demand in the past, you understand? And we're headed there, right? So as much as, yes, you go to the daily candle, if you go to the daily candle and sell, that's why you get stopped, because you literally will have to face this retracement. So now we're faced with, when price gets into here, where are we likely to retrace to? Probabilities to this high that has been created here, or this high that has been created here. Whatever the case is, I think we currently have a setup right now on volatility 10-1S, and it's somewhere around here. I just went to the M30, I zoomed out, and I said to myself, actually, we have this nice high. Something that has been created over here, right? And you can clearly see price came out impulsively like that. It hasn't been tapped into. So meaning the supply in there is probably fresh. And, you know, if I'm going to do what I have to do, I'll try to a certain extent, I don't like putting my zones too tight per se, because you don't want to get stopped out and then price goes in your direction, you know. So to a certain extent, in terms of a zone on the M30, I could look at this to say, you know what, if price is to come into somewhere around here, you know, I don't mind for us to look for a sell position somewhere around here, because we're utilizing the fact that we are going to probably get in here. There's some demand. We head to here, and then we go to the downside. It's not totally a crazy idea, because either way, why would you want to even buy this thing for a long time when the current market structure is telling you you've been going down? You understand? Look at this impulsive leg, corrective legs, and all that stuff. So, the market is actually overtaken by sellers. If anything, we truly want to look for a nice area for us to sell, and then it's all about risk to reward. On the M30 time frame, if price gets into even here, your job is to ensure that your stops go around here. By the time price gets there, whatever you've risked there, you could actually have doubled it, right? Right. So there you have it. Backtest this on your charts and watch your zones become highly probable. If you like what you see, feel free to contact me for the list of my services. My contact details are in the description of this video. Until next time, ciao.